for Destiny's Child.
Hello, hello, family. Hey, Wealth family, how you doing? I'm sorry I had to end this live a couple of times. All right. I am still trying to work through my Streamlabs issue. Like, it's literally not even letting me log in now. I don't know. Tomorrow, hopefully, my IT guy will be free. And then we can be back on Streamlabs. See, when I click it, it only gives me the option to log into Facebook, and that doesn't work for me. All right, guys, so we are going to go ahead and get started. Hi, if you are new here, my name is Sierra, the Wealth Empress. I am your day trading and credit and funding strategist. All right, and we are on day 3 of our Forex beginner course. Okay, so today and the next couple of days, or however long it takes us to get through it, we will be going through the Candlestick Trading Bible. Okay, so if you don't know, I trade the Japanese candlesticks, that's what these candlesticks are called here. And we can pull this chart up. We're just gonna pull up any chart. All right, so that's what these candlesticks are called, Japanese candlesticks. And in my opinion, these Japanese candlesticks paired with my fair value gaps and my CRT zones, they are the main portion of your trading, right? News doesn't happen every day, but news is also important, right? But what's mainly important is knowing how to read these candlesticks and how to know if price is going to continue or if price is going to reverse or if price is exhausting or if price is in indecision, right? So we know that when we see certain patterns at our zones, okay, then it'll tell us if price is going to reverse. And then we also, today we're going to learn if we see certain candlestick patterns, right? We will start to notice exhaustion. How you can get this trading book, I will put the link in the group Discord, okay? The Discord link is in my bio. All right. So we're going to go ahead and get started. The Candlestick Trading Bible, invented by this guy, because I'm not going to butcher that. The most successful trader in history. Wow. All right, so it just says overview, history of candlesticks. What is a candlestick? These are the major candlestick patterns, right? Remember, I've told you guys about the morning star and the evening star candlestick patterns and the golfing candlestick patterns. Those are the main 3 that I use. And then I told you guys the other day, we went over one doji pattern, but there are multiple doji patterns, okay? All right, and how to trade in trending markets. There is apparently 167 pages in this book. Okay, so for the next couple of days, this is what we're going to be going over. All right, let's get started. Let me see if I can zoom in on this a little bit more. All right, and if you want to go ahead and read this for yourself, again, join the Discord. The link is in the bio, and I will add this to the Discord. Hey, Kay, how you doing? Hey, Trisha, let me know if you got the ebook. All right, introduction. The Candlestick Trading Bible is one of the most powerful trading systems in history. It was invented by this guy, the father of candlestick chart patterns. This trader is considered to be the most successful trader in history. He was known as the god of the markets in his days. His discovery made him more than $10 billion, $10 billion in today's dollars. Okay, great. Trisha, glad to hear, Kay. I have spent 10 years compiling, testing, and organizing and consistently updating this method to create my own new version, which is considered to be the easiest and most profitable trading system. Now, remember, we're not using this as a trading system, but we do add these patterns into our strategy, okay? Yes, please tap the screen. Thank you. The Candlestick Trading Bible is the trading method that is going to finally take your trading to where it should be: consistent, profitable, easy, and requiring very little time and effort. This trading system is based on Japanese candlestick patterns in combination with technical analysis. And remember, these are Japanese candlesticks, okay? And these are the only candlesticks that I use in my strategy to trade. All right. All what you have to do is to spend as much time as you can to master the method that I'm going to share with you and use it to trade any financial market. Learning Japanese candlesticks is like learning a new language. Imagine you got a book which is written in a foreign language. You look at the pages, but you get nothing from what is written. The same thing when it comes to financial markets. If you don't know how to read Japanese candlesticks, you will never be able to trade the market. And I agree with that. I don't agree not necessarily never, right? Because there are some people that really don't know how to read them, right? But I just feel like it enhances how you trade, okay? Just knowing what the candlesticks are doing. All right. Japanese candlesticks are the language of financial markets. If you get the skill of reading charts, you will understand what the market is telling you, and you will be able to make the right decisions in the right time. The easy to follow strategies detailed in this work will provide you with profit-making techniques that can be quickly learned. More importantly, learning the principles of market psychology underlying the candlestick methodology will change your overall trading psyche forever. The Candlestick Trading Bible has already proven itself. Fortunes have been made using the Japanese candlestick strategies. I congratulate you on taking the first step in your trading education. You are on the right path to become a better trader. However, this is actually just the beginning of your trading career. After finishing this ebook, the real work begins. Don't read this book very fast. This is not a novel. You should take your time to understand all the concepts I discussed. Take your notes and go back from time to time to review the strategies I shared with you. Remember, this is an educational work that will teach you professional methods on how to make money trading financial markets. If you got the skills that I share with you here, you will change completely your life and the people around you, okay? And I don't know if you've heard this, but you don't need another job. You need a skill, okay? With AI coming out, they have people losing their jobs as far as like the people that clean the floor at Walmart. You don't see them people riding those machines anymore. They actually have machines cleaning those floors. And I also saw someone post a bot at those warehouses, and they're unboxing and boxing and organizing the boxes at the warehouses. I was listening to a podcast today, and she was saying that there are indefinitely going to be thousands of hundreds of thousands of jobs replaced by AI. Okay, so you don't need another job. You need a skill. And I believe that trading in the financial markets is the skill that you need to acquire. Hey, Instagram, come over here to TikTok and you'll be able to see my chart. Okay, my TikTok handle is the same as Instagram. It's Sierra underscore the underscore wealth underscore empress. Okay, so I just hope that you guys are taking notes on today and you're rewatching these videos. Okay, don't forget to join the link. The Discord is a free server. All right. So that you guys can get the homework assignments and continue to ask questions. All right, so it says the ebook is divided into the following sections: candlestick anatomy, candlestick patterns, market structure, time frames and top-down analysis, and trading strategies and tactics, okay? The engulfing bar strategy, the inside bar strategy, the inside bar false breakout strategy, trade examples. I highly recommend you to master the previous sections before jumping to this section, because if you don't master the basics, you will not be able to use strategies as effective as it would be. In this section, you will learn how to identify high probability setups in the market and how to use these candlestick patterns in trending markets and ranging markets to maximize your profits. In this section, you will learn how to create a money management and risk control plan that will allow you to protect your trading capital and become consistently profitable. I had to ban somebody in the Discord. Let me tell you something. If you know everything, don't join the Discord. Like, what do you need to come in there for? He said that he doesn't use a stop loss. And I'm like, well, that's not good risk management. He's like, no, I just enter trades and pray. I'm like, okay, well, we all do that at the beginning, right? But if you want to do this and replace your job, you have to learn risk management. Risk management is a strategy within itself, right? So that's one of the things that they're saying that they're going to teach us in this book. It's been a while since I've read this book. I have been trading for almost 5 years. Okay, so it's been a while since I've read this book, so this is going to refresh me on some things also. Hey, Smo. I don't know if that's how you saying your name, but how you doing? Hey, Judah. Listen, they'll learn, but he posted a thing, right? I'm like, what's TikTok? Is Sierra underscore the underscore wealth underscore empress. It's the same handle as my Instagram. But he posted a picture of his account, and we all know it was demo. Because if you're up $300,000 on an account, why are you joining a student server? Like, no, thank you. So, but you can't teach everybody everything, right? There's always going to be people out there that think they know everything. So we're not going to focus on them. We're going to focus on the ones who want to learn, right? Which is you. And give yourself a pat on the back for showing up today, because showing up is the first part. And then the second part is learning, okay? And the third part is acting. And then the fourth part is learning on the things that you've acted on, okay? So let's get started. History of candlesticks. Candlesticks have been around a lot longer than anything similar in the Western world. The Japanese were looking at charts as far back as the 17th century, whereas the earliest known charts in the US appeared in the late 19th century. Rice trading had been established in Japan in 1654 with gold, silver, and this should probably say grapeseed oil following soon after. Rice markets dominated Japan at this time, and the commodity became, it seems, more important than hard currency. And even to this day, rice is really big in Asia. All right. This guy, because I'm not going to butcher his name, a Japanese rice trader born in the early 1700s, is widely credited as being one of the early exponents of tracking price action. Hey, he understood basic supply and demand dynamics, but also identified the fact that emotion played a part in the setting of price. He wanted to track the emotion of the market players, and this work became the basis of candlestick analysis. He was extremely well respected to the point of being promoted to samurai status. The Japanese did an extremely good job of keeping candlesticks quiet from the Western world right up until the 1980s, when suddenly there was a large cross pollination of banks, financial institutions around the world. This is when Westerners suddenly got wind of these mystical charts. Obviously, this was also about the time that charting in general suddenly became a lot easier. Due to the widespread use of the PC in the late 1980s, several Western analysts became interested in candlesticks in the UK. Michael Feeney, who was then head of TA in London for Sumitomo, began using candlesticks in his daily work and started introducing the ideas to London professionals. In December 1989, edition of Futures magazine, Steve Nissen, who was a technical analysis at Merrill Lynch in New York, produced a paper that showed a series of candlestick reversal patterns and explained their predictive powers. He went on to write a book on the subject, and a fine book it is too. Thank you. Okay, I need to look up this book. This is why I said it's been so long. Hold on, guys. I'm going to Google this real quick so I can add this so we can learn it. What's his name? Steve Nissen. I think they out back. I swear I ain't seen a fly all day. And then I go live and it's a fly right here. Okay. Okay, so he has a Japanese candlestick charting book also. This one that we're reading is like the most popular. All right, so where were we? He went on, okay, since then, candlesticks have gained in popularity by the year, and these days they seem to be the standard template that most analysis work from. Why candlesticks are important to your trading analysis. Candlesticks are important to you to your trading analysis because it is considered as a visual representation of what is going on in the market. By looking at a candlestick, we can get valuable information about the open, the high, the low, and the close of price, which will give us an idea about the price movement. Candlesticks are flexible. They can be used alone or in combination with technical analysis tools such as moving averages and momentum oscillators, and they can be used also with methods such as the Dow theory or the Elliott wave theory. All right, so we don't use any indicators because indicators are lagging. We solely rely on candlesticks for price action and then the gaps that the candlesticks make and the zones that the candlesticks make, okay? I personally use candlesticks with support and resistance. That is a no, we're not doing that. Trend lines, we do use trend lines, and other technical tools that you will discover in the next chapters. The human behavior in relation to money is always dominated by fear, greed, and hope. Candlestick analysis will help us understand these changing psychological factors by showing us how buyers and sellers interact with each other. Candlesticks provide more valuable information than bar charts, which I do agree. So if you come over here, let's find the bar. I know. Here it is, bar. And you see the bar. First of all, it just looks funny. Like, what is going on here? I think I can tell if there's a gap, right? I think. Yeah, that was a gap. I'm just so used to the candles, okay? Candlesticks provide more valuable information than bar charts. Using them is a win-win situation. because you can get all the trading signals. The bar chart generated with the added clarity and additional signals generated by candlesticks. Candlesticks are used by most professional traders, banks, and hedge funds. These guys trade millions of dollars every day. They can move the market whenever they want. And if you don't know, fun fact, the money that's sitting in your bank account is being traded by the banks, okay? You see the digital number there, right? They're showing you that this amount is in your account. But when the banks are open, they are using that money to make money off of, and they're not even giving you a percentage of it. How freaking rude, okay? They can take your money easily if you don't understand the game. Even if you can trade $100,000 trading account, you can't move the market, and we can't. This is why we only react to the market. You can't control what is going on in the market. Using candlestick patterns will help you understand what the big boys are doing, and a lot of people call them the market makers, and it will show you when to enter, when to exit, and when to stay away from the market. All right, what is a candlestick? Japanese candlesticks are formed high, low, and close of the chosen time frame, okay? So the chosen time frame, meaning remember across the top of my chart, I have my time frames, and all of this happens on every time frame with every candlestick, okay? So they call this a shadow, this line right here, but most of the time you'll hear people call it a wick, and you will also hear me call it a wick. Hey Tasha on IG, come on over to TikTok. It's my same handle if you want to see the screen. It's also this, so upper shadow, this is a wick, okay? This is the body, the middle part, and then the lower wick, okay? So price, showing this right here, showing you that it was a high, okay? And then this part is showing you this is where the body closed, okay? This is where the body opened, and this is where the low of the candle is, okay? Over here, we have a wick, and again, this was the highest point. This is where the candle opened, this is where the candle closed, and this is the low. So we're going to go over here to a chart, okay? And I'm going to use these two right here, okay? So I'm going to zoom in. All right, so this is a wick, and then as you can see, there's no upper wick. All right, so price, since this was our previous candle, on our previous candle, price closed right here. 90% of the time, where price closes, your new candle will open. The only time it doesn't do that is when price creates a gap, okay? So here we have a gap. This is where our candle closed, and this is where our candle opened, creating this gap, okay? So this is on this candle, this is where our candle opened, right? Because this is where it closed, this is where it opened, this is where it closed. Now this is where the next one opened, and this is where it closed. This is where the next candle opened, this is where it closed. This is where the next candle opened, okay? So do y'all understand the opening and the closing of the candlestick bodies, okay? So again, price is going to, the next candle is going to open where the previous candle closed. The only time it doesn't is if price creates a gap, okay? So remember, this is where this candle closed, okay? And this is where this one opened, okay? Now this is where this one opened, and this is where this closed. This is where this opened, this is where it closed. This is where it opened, this is where it closed. This is where it opened, this is where it closed, okay? This is where it opened, this is where it closed. As you can see, most of the time, it's going to open and close in the same area unless price creates a gap. I'm going to do that. All right. And then remember, these are our wicks. Okay. So whenever it says shadow, I'm just going to say wick. All right. If the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as a white candlestick. On my chart, my bullish candlesticks are black and my bearish candlesticks are pink. Okay? The most trading platforms use white color to refer to bullish candlesticks, but the color doesn't matter. You can use whatever color you want, which you can. I showed you guys the other day how to set up your colors on your chart. All right, and that video has been posted to YouTube. Hey, Primal. The most important is the open price and the close price. If the close is below the open, we can say that that candlestick is bearish. Okay, so they said if the close is below the open. So remember, this is our previous. This is where price opened. This is where price closed, right? So the close is below the open. So that means this candlestick was bearish. Okay. Price opened up here. Then the sellers came in and they pushed it down. All right. And then if the open is above the close, that means it's bullish. Okay. So this was our open and this was our close. All right. It says you can find different colors used to differentiate between bullish and bearish candlesticks. The filled part of the candlestick is called the real body. The thin lines poking above and below the body are called, remember, I'm going to replace it with wicks. The top of the upper wick is the high. The bottom of the lower wick is the low. Okay? So we can use this one right here, right? Price closed here, price opened here, okay? Price pushed up, this is our high, right? And then price pushed down, this is our low, and then price pushed up and it closed right here, okay? Again, let's zoom in. Remember, our last candle closed here, all right? So our next candle opened here, then price pushed up, and this is as high as price got, and then the sellers came in and they pushed it down, and then price pushed up a little bit more and it closed here, okay, resulting in our next candle opening here. All right, our next candle opened here and then price pushed down, okay, and then it pushed up and it closed here. All right. So the wicks is just telling you, am I still on here? I am frozen, but we're going to continue frozen. Okay. I'm not going to cut this off. All right. So the wicks is just telling you where price tried to go, right? So these are the wicks. Remember, price closed here, price opened here, price tried to push us up, and then the sellers came and was like, no, we're gonna sell. And then this is considered a doji candle when you have a small body and large wicks, right? It's a large wick to the upside, not necessarily to the downside. All right, this pair is GBP odd, but that's not important. We're going over the candlestick Bible. All right, so the wicks do the damage, but the bodies tell the story. All right. So this is saying that price tried to push up and then price tried to push down. And then at the end of the day, when you look at the wick, you can tell that price closed more to the downside of this candle than to the upside, right? So that's saying that they're trying to sell, right? So then it closed here and then it opened here, okay? And remember, they was trying to sell, so it dropped. And then the buyers came back in. Now, this candlestick pattern is really a bullish candlestick pattern, right? Because there's no wick to the upside. So that means when this candle closed, the buyers were in control. Okay? But it closed, and then the sellers came back, and the sellers was like, no, we are selling. Okay? And then eventually it did sell. So this is probably at some kind of zone. If I was to scroll over, because we are on the 1 minute. I don't see any gaps. It ran some highs right here. But stuff like this is what you want to look for at your CRT zones or your fair value gaps, okay? All right. How did I get there? All right, so it says the fill part of the candlestick is called the real body. The thin lines poking above and below are called, remember, we're going to replace shadows for wicks. The top of the upper wick is the high. The bottom of the lower wick is the low. Candlesticks have different body sizes, long versus short. Long bodies refer to strong buying or selling pressure. So the bodies will tell you, I'm trying to think of the word. So when you have like smaller candles, that means exhaustion, right? It means that price is still trying to figure out where it wants to go. But when you have these big candles like this, it is completely like, okay, sellers are in control. Let me find my way into the market. I'm not sure if it went through, but send it again. Okay. Yes. All right. If there's a candlestick in which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time. Conversely, if there is a bearish candlestick in which the open is above the close with the long body, this means that the selling pressure controls the market during this chosen time frame. And we just showed y'all that. So it's saying, okay, if there's a bearish candlestick, all right, so remember my pink is bearish. This is a bearish candlestick. If there's a bearish candlestick in which the open, all right, this right here is the open, because remember, this is our last close. If there is a bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during this chosen time frame. Okay, so this is a bearish candlestick, and the open, it says, is above the close with the long body. Bearish candle. That isn't right. If there's a bearish candlestick and the open is below, okay, that means that there is bearish pressure, okay? So remember, this one right here is our bullish. Price closed here, price opened here, and then price closed here. So that's showing us bearish pressure. All right, especially when you have a full candlestick like this. This is a crazy candle. You see that little tiny wick? Oh yeah, bears have come into the market. And then as you can see, it came down a little bit. Then it came up, ran some liquidity, okay, and then decided to come in. But this is why it's important to pay attention to these candlesticks at zones, but we will get to the zones. All right. Short and small bodies indicate a little buying or selling activity. Yes, that is an engulfing candle for sure, and also known as a displacement. All right, candlestick wicks. The upper and lower wicks give us important information about the trading session. Upper wicks signify the session high, lower wicks signify the session low. Candlesticks with long wicks show that trading action occurred well past the open and close. Okay, so you have your long wick at the top, okay, and then you have your long lower shadow. So these two candlesticks are called pin bars, okay? So this is when the buyers tried to push price up, okay? Which is why we have this wick up here, and then price pushed all the way down, and then remember price closed here, okay? And then the same would be opposite over here. The sellers tried to come in, and then the buyers came in, okay? Your book is far better. All right, great. Go promote it on your channel. Have a good day. All right, Japanese candlesticks with short shadows indicate that most of the trading action was confirmed near the open and close. If a candlestick has a longer upper shadow and a short lower shadow, this means that buyers flex their muscles and bid price higher. Okay, so this is just talking about the wick. But for one reason or another, sellers came in and drove price back down to end the session back near its open price. If a Japanese candlestick has a long lower wick and short upper wick, this means that sellers flashed their washboard abs and forced price lower, but for one reason or another, price came in and drove prices back up to end the session back near its open price. And they're just talking about these, right? Okay. So remember, price opened here, the bulls came in, then the bears came in, pushed it down, and then price closed here, okay? And then on this one, price opened here, the bears came in, and then the bulls came in, and then price closed here. And if you don't know, bears mean sell, bulls mean buy, okay? All right, candlestick patterns. Candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups. A research has confirmed that candlestick patterns have a high predictive value and can produce positive results. I personally trade candlestick patterns for more than 20 years. I can't really switch to another method because I tried thousands of strategies and trading methods with no results. I'm not going to introduce you to a holy grail. This trading system works, but be prepared to lose some trades. Losing is a part of this game, and losing is a part of the day trading game. I don't think I've ever heard of anybody who has a 100% win rate, right? But with good risk management, you can be profitable with a 20% win rate, okay? So don't stress that. Just have good risk management. If you are looking for a 100% winning system, I highly recommend you to stop trading and go look for another business. Candlestick patterns are the language of the market. Imagine you are living in a foreign country and you don't speak the language. How could you live if you can't even say a word? It's tough, right? The same thing when it comes to trading. If you know how to read candlestick patterns the right way, you will be able to understand what these patterns tell you about the market dynamics and the trading behavior. This skill will help you better enter and exit the market in the right time. In other words, this will help you act differently in the market and make money following the smart guys' footprints, okay? The market makers. The candlestick patterns that I'm going to show you here are the most important patterns that you will find in the market. In this chapter, I'm not going to show you how to trade them because this will be explained in details in the next chapter. What I want you to do is focus on the anatomy of the pattern and the psychology behind its formation, because this will help you get the skill of identifying easily any pattern you find in the market and understand what it's telling you to do next. If you can get this skill, you will be ready to understand and master the trading strategies that I'm going to teach you in the next chapters. All right. The engulfing bar candlestick pattern. As you can see, somebody in the comments was able to identify the engulfing bar already. All right. So the engulfing bar, as it states in its title, is formed when it fully engulfs the previous candle. The engulfing bar can engulf more than one previous candle, but to be considered an engulfing bar, at least one candle must be fully consumed, okay? And it's the candle that was formed right before the engulfing, okay? The bearish engulfing is one of the most important candlestick patterns. This candlestick pattern consists of two bodies. The first body is smaller than the second one. In other words, the second body engulfs the previous one. All right. And this is the illustration. Okay. So you have a smaller body. Okay. And remember, price opened, price pushed up, and then the bears came in and price closed down here, signifying that the bears are coming in. And remember, we have an engulfing right here. Okay. Right here. You see how much bigger this candle is compared to this candle. Let's see. Oh, this one too. Here we go. Look at that. Beautiful, right? This one right here necessarily wouldn't be an engulfing, right? Because they're similarly equal, and then the body has to close underneath the wick, okay? So this would be a bullish engulfing, right? So these candlesticks are more important, like I said, at our fair value gaps or at our CRT ranges, but we do want to identify how to see them, okay? All right, so this is how a bearish engulfing doesn't have to cover both body and its wicks before it can be considered an engulfing candle. No, it doesn't have to. So in the picture here, it does have the wicks covered, but on this one right here, you see how the wick is up here, right? Price closed here, price opened here, and this completely engulfed this. So no, it doesn't have to, right? But you also don't want it to have really big wicks, right? So let's say if this wick came up here like this, then yes, you would want it to cover that, okay? I'm trying to help, girl. I'm trying to help. Okay? So, but this has a very tiny wick, right? So remember this candle, right? Remember the last one closed here. It opened here, right? Price pushed down, and then price pushed up, and then price closed here. It doesn't have to cover this little tiny wick. But if there's a long wick, then no, it would not be considered engulfing. You do want it to come and run that wick, okay? Because right here, this is also an engulfing, but you see how little that wick is, right? The link is in the bio, guys, for the student server. All right. Oh, I'm glad you used it and it worked. So listen, using that FVG and then pairing it with these candlesticks, oh, it's top tier. You're really about to be making some money. All right. So that's a bearish engulfing. Okay. So did that answer your question before I move on? Be glad. I trade ICT concepts with Romeo CRT zones. There's a video on the CRT zones also on my page. Hey Destiny, how you doing? Love him down. Be glad before we move on. Did you understand the engulfing? Okay. So we're going to move on to what this says. In case of a bearish engulfing bar, the link to my YouTube is in the bio on the link tree. In case of a bearish engulfing bar, this pattern tells us that sellers are in control of the market. When this pattern occurs at the end of an uptrend, this indicates that buyers are engulfed by sellers, which signals a trend reversal, okay? And these candlestick patterns, again, are more powerful at our zones, okay? So this is showing you an uptrend, and then it's showing you the bearish engulfing pattern, right? This candle was bigger than the last candle, completely engulfed it. All right. Yep, this is the candlestick trading Bible. I'm gonna add a link. I'm gonna add this link to the Discord too, so you guys can go in and look at it on your own. And then it's showing you that it reversed. So paired with a fair value gap. So let's see if we can find that real quick. Paired with a fair value gap. Bam, right here. All right. So our fair value gaps, okay, if you weren't here the other day, a fair value gap is fair value gaps occur when the market makers come into the market and they drop millions of trillions of dollars to push the market in a different direction, and they do it to move price, and it moves price so fast that it leaves these gaps. Okay, so if you see, there's a gap here and there's a gap here, right? But if you look at the other candles, every candle like trades into the next. There's a gap here, but then the rest of them, you see how it kind of like this one is inside of that one, left a little gap here. This one traded into that one. This one traded into that one. There's a little gap there, right? So these are fair value gaps. And these are our zones, and this is where we want to look for these candlestick patterns at, right? And so price came back to 50%, and then it gave us an engulfing. And this is why I said it doesn't have to completely cover the wick, okay? So it gave us an engulfing pattern, and it gave us some rejection off of the 50% to let us know that price is going lower, okay? We didn't quite get a 50% here, and we didn't really get an engulfing here, but we did get an engulfing pattern here, okay? And as you can see, price continued lower. Then we got another engulfing candlestick pattern, which left us another fair value gap, okay? Price came back to the 50%, and then it continued to sell. Yeah, I don't touch it if it don't come to the 50%. So like I caught this trade the week before last, got out at 50% of my weekly, which was somewhere right here. And then I wanted to catch this other sale, and I set my alert, but it played me. So because a lot of times, right, if it doesn't come to the 50%, it's called inducement. And most of the time, price will come back and touch it. But in this case, let's see what happened. Okay, so in this case, price hasn't come back and touched it yet. Okay. So when it does get here, then I either want to see rejection or I want to see price trade through it and then retest it, okay? But I need 50% in order for it to be valid for my entry. All right. But remember, at these zones, we are looking for these patterns, okay? So this is an engulfing pattern. Where's our other engulfing? Here, okay? This is an engulfing pattern, all right? And it created a zone. Then price came back to it. This is also an engulfing pattern. These two right here. All right. So the candle just has to be extremely bigger than the other candle. This is why I said it doesn't have to cover the wick, because sometimes it's not going to. It looks like it did touch that. Nope, it didn't. It didn't touch it. It touched it here, but it didn't touch it here. All right. I can draw my gap again. See? I literally was watching this. And then I was a little salty because I was like, oh, maybe this should have been the day that I trailed it. But we can't be salty. We got to be grateful for what we got. And this was actually like 100 and something pip trade. So, and I can actually go to the journal in Discord and show y'all the trade. Was it 5-5? I gotta update the trades for this week. Here it is. Right, so this is what you want to see. Hey, Fortunas. And then I think I posted a one where I was like, we're looking for this, and it never came back. It did me so dirty. And I just set my alarms, and I set my alarms, and if it doesn't hit my alert, then I'm not worried about it. I don't see it. Okay. Hey, from Brazil. All right, so it says, as you can see, when this price action pattern occurs in an uptrend, we can anticipate a trend reversal because buyers are not still in control of the market and sellers are trying to push the market to go down. You can't trade any bearish candlestick pattern you find on your chart. You will need other technical tools to confirm your entries, okay? So you cannot just trade this by itself. You have to pair it with a CRT range, which we'll go over another day, and then you have to pair it with your fair value gaps or your order blocks or run on liquidity, okay? We will talk about this in details in the next chapter. Right now, I just want you to open your charts and try to identify a bearish candlestick. Yep, that was my Discord. All right, so we did that. The bullish engulfing bear pattern. Not bear, oh my goodness. The bullish engulfing bar pattern. The bullish engulfing bar consists of two candlesticks. The first one is the small body, and the second is the engulfing candle. Exactly the same as the bearish, right? But it's bullish, right? So you'll have your smaller candle, and then you'll have your bigger candle, okay? Okay. That's the paid signals group. The bullish engulfing bar pattern tells us that the market is no longer under control of sellers and buyers will take control of the market. When a bullish engulfing candle forms in the context of an uptrend, it indicates a continuation signal. When a bullish engulfing candle forms at the end of a downtrend, the reversal is much more powerful as it represents a catapultation bottom. See the example below. Okay, so it's saying we have a downtrend, and then we have a bullish engulfing, and then price goes up. The example above shows us clearly how the market changes directions after the formation of a bullish engulfing bar pattern. The smaller body that represents the selling power was covered by the second body that represents the buying power. The color of the bodies is not important. What's important is that the smaller one is totally engulfed by the second candlestick. Don't try to trade the market using the price action setup alone because you will need other factors of confluence to decide whether the pattern is worth trading or not. I will talk about this in the next chapters. what I want you to do now is get the skill of identifying bearish and bullish on your charts. Okay, so we did the bearish. Now let's see if we can find a bullish engulfing at a zone. Okay, so here's a bullish engulfing, right? Got this big candle and the small candle. But let's see if there was a gap. Nope, no gap, but there was a run of liquidity. Okay. Let's see. Remember earlier we showed the pin bar. So we have a gap right here. Price came back to the 50%. And this one right here. So remember, price closed on the last one right here. Price opened. Price pushed down to the 50. And then price pushed up and closed here, right? So price tried to push up. So I'm going to do that again. Price closed here. Price opened here. Okay. Price pushed up. Price came down. And then price closed here. Okay. So this is a pin bar. You see how it's looking almost like an arrow up, right? It's got that long wick at the bottom. And then the upper half of the body is leaning more to the higher side of the candle than the lower side. So that's also a reversal signal pattern. And we had that earlier in the first couple of pages, okay? All right, so here's another engulfing. Here's another engulfing. I want to find one at a zone. A bullish engulfing. Come on in, girl. So we're seeing on GBP alt, we're seeing a lot of bearish ones at a zone, right? Here's our zone. Price rejected. Here's our small candle. Here's our big candle. Bearish engulfing. I can't find a bullish one. I see a lot of bearish ones. I see a lot of pin bars on the bullish. And that one didn't fully touch, but this is a pin bar, right? It didn't fully touch my 50%, but that's a pin bar. It's $47 a month. It's free for the first 30 days. Yep, you get full access. Where are we? Okay. So here's our fair value gap, right? Price came underneath the gap. And if you don't know, you want to wait for price to get on top of the gap. In this case, price came underneath the gap, price opened and got on top of the gap. And then with this funky looking candle right here, price retested, okay? And then price engulfed this candle, all right? Now, there's no way that I would trade this hourly candle. I'm just trying to show y'all on the higher time frames. As we get further in, we will identify how to find these on the lower time frames for better entries, because ain't no way I'm going to enter at 80 pips, right? That's at the top of the candle, right? So remember, the candle would close here, you'll be entering here, and then your stop loss would be here. Ain't no way I want a 64 pip stop loss. But I just want to show y'all a bullish engulfing candle at a zone, okay? I know I'm frozen, but I don't know how to fix it and without stopping the live. So, but y'all can see. Can y'all see my chart? Y'all can see my chart, right? As long as y'all can see the chart and the book, then that's fine. Okay, yeah. I'm not gonna worry about my face today. All right, so this is a bullish engulfing at a zone, right? So this one right here completely engulfed it. It ran the wick, okay? And it closed up here. Alrighty. The doji candlestick patterns. Remember, there's a bunch of dojis, so I don't know how many they're going to go over. If they only go over one, we will go over the other ones another day. All right. All right. The doji candlestick pattern. Doji is one of the most important Japanese candlestick patterns. When the candlestick forms, it tells us what the market, it tells us that the market opens and closes at the same price, which means that there is equality and indecision between buyers and sellers. No one is in control of the market. Okay? So remember, these wicks are showing us where price went, right? So price opened, right? It bought up, it pushed down, and then it closed in the same area that it opened. These are called doji candlestick patterns. And it's just saying that I'm not really sure what's going to be next, right? So as you see right here in this area, we have a bunch of doji candlesticks. A bunch of it, right? When you see these, that means to just wait. Just wait. Because we don't know what's going to happen next. Okay? Versus when you see this, right? This is also called a doji, but it's called a pin bar, right? So you see how the wick price tried to come down here and then the buyers pushed up. This candlestick is showing me bullish direction. These are showing me I'm not really sure. And then remember, you need to pair it with a zone, a fair value gap or a CRT zone, okay? So these are just saying I'm not really sure. And then this one is saying, oh, I came back into this gap and I want to be bullish. Oh, and then also when somebody said, do I wait on the 50%? You see how close this came to the 50%? And it looked like it wanted to go and then it came back. That is called inducement. So if it does not touch my 50%, I don't want it because most of the time it's going to come back. And if it doesn't come back and it goes your way, then just find another gap to get in on, okay? Wait for price to break the structure, but we'll go over that also another day. All right, so dojis and then pin bar doji. All right. And that's a bullish pin bar doji. Remember, it's bullish if price closes up at the top, bearish if price closes near the bottom. Here's another bullish one. Trying to see if I see a bearish one. Oh, here's a bearish one, but it's kind of tiny, right? But this one is a bearish one. When they're in the middle like this, that's when you get more of your indecision, okay? All right, so as you can see, the opening price is the same as the closing price. This signal means that the market didn't decide which direction will take. When this pattern occurs in an uptrend or a downtrend, it indicates that the market is likely to reverse. All right. So remember, we're just not looking for these patterns randomly. They have to be paired with our confluence. Okay. So he said it's likely to reverse, but yeah, we just want to double check. Don't just see every doji, right? And be like, oh, it's for the sale. No, because that doji will come and then it'll consolidate and then it'll continue higher. The chart above shows how the market changed direction after the formation of the doji candlestick. The market was trending up. That means that the buyers were in control of the market. The formation of the doji candlestick indicates that buyers are unable to keep price higher and sellers push prices back to the opening price. This is a clear indication that a trend reversal is likely to happen. Remember always that a doji indicates equality and indecision in the market. You will often find it during periods of resting after big moves, higher or lower. When it is found at the bottom or at the top of a trend, it is considered as a sign that a prior trend is losing its strength. So if you are already riding that trend, it's time to take profits. It can also be used as an entry signal if it is combined with other technical analysis. So I think, if I'm thinking right, I can show y'all. Nope, let me come over here. I think it was EU. I thought we had a doji at this gap yesterday, but here's a pin bar. So remember how important it is to pair it with these gaps. But I thought we had a doji at this to show y'all that it was losing its strength. There is one here, right? So we have this bullish move up. Okay. And then there's a doji and it looks like price is trying to come down. But this bullish move up came to a gap. All right. All right. And most of the time when you see these dojis, you're going to see them in sideways movement, right? And what I was taught is when you see sideways movement or consolidation, that does mean exhaustion in the market and the trend is trying to reverse. But sometimes you'll get this sideways movement and then price will continue, okay? Like right here. So we got this downtrend and then we got these little dojis, price was thinking, and then we got this big bearish candle, okay? And then price decided it wanted to turn around. All right, the dragonfly doji pattern. The dragonfly doji is a bullish candlestick pattern which is formed with the open high and close. I don't think I read that right. The dragonfly doji is a bullish candlestick pattern which is formed when the open high and close are the same or about the same price. What characterizes the dragonfly doji is the long lower wick that shows the resistance of buyers in their attempt to push the market up. All right. So this is a dragonfly, right? So price came all the way down here. The bears came in and then the bulls came in and pushed price up. All right. So let's see if we can find a dragonfly. You know, I don't even think I've ever actually looked for a dragonfly. Let's see. Let's go down to the lower time frame. Because there was no body on that. It was just a flat tail. Okay, here's something similar. Oh, nope. It looks different now that I made it bigger. I thought this was one. Like there's completely barely anybody. Okay, here's one, but it's not dragonfly. I think, let's see. What is it called when it's bearish? Okay, a gravestone. So this one is a gravestone. Where did it just go? Right here. Even though there's a little bit of a wick, make it easier for y'all to see it. That don't help. Now I'm just getting mess on my chart. Nope. Okay. This one right here is a gravestone. So it's the same as the dragonfly, right? But it's the bearish. Okay. Could this... Yep, you can get this book. Join the free student server. When we get done with this live, I'm going to post a link to this book. All right, so this is the gravestone. All right, and the gravestone is the bearish dragonfly. Okay, so the gravestone doji is the bearish version of the dragonfly doji. It is formed when the open and close are the same or about the same price. What differentiates the gravestone doji from the dragonfly doji is the long upper tail. The formation of the long upper tail is an indication that the market is testing a powerful supply or resistance area. All right. So that's the gravestone. And let's keep looking to see if we can find a, what was it? Dragonfly. Finally found one. Bam. Dragonfly. You said dragonfly on... Oh, you found one? Thanks for looking. I just found one as soon as I saw your comment. Okay, so here's a dragonfly. All right. So remember our previous candle closed here, right? Then price opened here, it pushed down, and then price came back and closed here. And then our next candle opened where that price closed, okay? So this is our dragonfly. So that's just showing that the bulls are trying to take over. All right, so we did the gravestone, we did the dragonfly. The image above illustrates a perfect gravestone doji. This pattern indicates that while buyers were able to push prices well above the open, later in the day, sellers overwhelmed the market, pushing the price back down. That is interpreted as a sign that bulls are losing their momentum and the market is ready for a reversal. Hey guys, can y'all do me a favor and tap the screen? Can we get this to 10K, please, so that other people can find out about the channel and come learn how to make some money also. I appreciate y'all. All right, so this is interpreted as a sign that bulls are losing their momentum and the market is ready for a reversal. And remember, we have to pair these candlestick patterns with zones, okay? Don't just see this and think that it's going to look like this, because I don't even know where they got this from. Like, nah, this is unrealistic. This is interpreted as a sign. Okay, so we said that. All right, the chart above shows a gravestone doji at the top of an uptrend after a period of strong bullish activity. The formation of this candlestick pattern indicates that buyers are no longer in control of the market. For this pattern to be reliable, it must occur near a, I'm not going to say level of resistance. It must occur at a fair value gap or a CRT zone or a run on liquidity, okay? As a trader, you will need additional information about the placement and context of the gravestone doji to interpret the signal effectively. This is what I will teach you in the next chapters. The morning star. If you guys have been on my live, I will say the morning star and the evening stars are hands down my favorite reversal patterns. I see these all the time. Okay. The morning star, all right, has a bearish candle and then a doji and then a bullish candle. Okay. The morning star pattern is considered a bullish reversal pattern. It often occurs at the bottom of a downtrend, and it consists of 3 candlesticks. The first candlestick is bearish, which indicates that sellers are still in charge of the market. The second candlestick is a small one, which represents that sellers are in control, but they don't push the market much lower, and this candle can be bullish or bearish. The third candle is a bullish candlestick that gapped up on the open and closed above the midpoint of the body of the first day. This candlestick holds a significant trend reversal signal. The morning star pattern shows us how buyers took control of the market from sellers. When this pattern occurs at the bottom of a downtrend near a support level, it is interpreted as a powerful trend reversal signal. All right. Remember, I don't do support and resistance, but this pattern, a bearish candle, a doji, and then a bullish candle at a fair value gap is top tier. Okay, so let's see. Here we go, right here. We got a fair value gap. Okay. And then price gave us a bullish candle. Let me zoom in a little bit. All right. Price gave us a bullish candle. Okay. A doji. And then a bearish candle. This is actually evening star. This isn't a morning star, but this is an evening star, letting you know that price is going lower. All right. Let's see if I can find a morning. Right here. We got a fair value gap. Price didn't quite touch the 50, but we have our bearish candlestick. We have our doji, and then we have our bullish candlestick, okay? And then as you can see, price continue higher. All right. All right, the evening star pattern, which was the first one that I found, the evening star, okay? Bullish, doji, bearish, okay? How do I get the middle line on the rectangle? I put my border at 0%, and then I just click the middle line, okay? And that's how I get it. And then you can put whatever color you want. All right, so the evening star pattern is considered as a bearish reversal pattern that usually occurs at the top of an uptrend. The pattern consists of 3 candlesticks. The first candle is a bullish candle. The second candle is a small candlestick. It can be bullish or bearish, or it can be a doji or any other candlestick. The third candle is a large bearish candle. In general, the evening star pattern is the bearish version of the morning star pattern. See example below. Okay, so you have your bullish, you have your doji, and then your bearish. All right. The first part of an evening star is a bullish candle. This means that bulls are still pushing the market higher. Right now, everything is going all right, and the formation of the smaller body shows that buyers are still in control, but they are not as powerful as they were. The third bearish candle indicates that the buyer's domination is over and a possible bearish trend reversal is likely to happen. See another chart that illustrates how the evening star could represent. Okay, so they're saying that this candle happens at the top of an uptrend because it's signifying a reversal. Okay, so the morning star happens at the bottom of a downtrend. All right, right here at the bottom of a downtrend because it's signifying that price is about to buy. All right, the pin bars, like one of my second favorite candlesticks, or the hammer, okay? The hammer candlestick is created when the open, high, and close are roughly the same price. It is also characterized by a long lower wick that indicates a bullish rejection from buyers and their intention to push the market higher. All right, so this is our hammer. Remember, the hammer and the dragonfly look similar. No, we're not closing. It's Friday at 9 p.m. The market is closed. All right, so the hammer and the dragonfly look similar, right? But on the dragonfly, there's really no body. It's just a little like cross because the open and the close is the exact same price. On the hammer, the open and the close are near in price, right? And remember, this is open, this is closed, right? So they're near in price, and it leaves this little box, right? And when they're exact same in price, it's gonna leave just a little line across, and it's gonna look like a T, right? And then the bearish dragonfly, which I can't remember what it's called, it's gonna look like a upside down kind of crooked L. Okay, so this is a hammer. Okay, it's showing you that the bulls are trying to take over. All right, so price opened, the bears came in and dropped it, and then the bulls came in and closed it up here, and they're trying to push price up. It says this candle forms when sellers push the market lower after the open, but they get rejected by buyers, so the market closes higher than the lowest price. All right, and it's just showing you an example of the hammer or pin bar. Okay, these pin bars are my favorite. These and the morning stars on those gaps all day. I'm gonna get in right there at the top. As you can see, the market was trending down. The formation of the hammer pin bar was a significant reversal pattern. The long shadow represents the high buying pressure from this point. Sellers was trying to push the market lower, but in that level, the buying power was more powerful than the selling pressure, which results in a trend reversal. The most important to understand is the psychology behind the formation of the pattern. If you can understand how and why it was created, you will be able to predict the market direction with high accuracy. Okay? And the psychology behind the pattern is just, again, okay, market opened here. All right. The sellers tried to come in. This is another reason why you want to wait on your candlesticks to close. Okay. This is why I enter on the lower time frame versus the higher time frame. But you want to wait on your candlesticks to close because if you were watching this in the live market and you saw that price was opening here, and then you saw that the sellers came in and they pushed it all the way down here, but you didn't wait for it to close, and now you're in right here, and then the buyers came in and they closed up here. Now you're in a losing trade. Okay? So that's the psychology behind it. You definitely have to wait for these candlesticks to close to show you what price is going to do, okay? All right, so now you have the shooting star, which is a bearish pin bar. The shooting formation is formed when the open, low, and close are roughly near the same price. This candle is characterized by a small body and a long upper wick. It is the bearish version of the hammer. Professional technicians say that the wick should be twice the length of the real body. See the example below. All right, so let's go find a hammer and a shooting star, and bam, at a gap. Here we go. So I have a fair value gap right here, back near that same area. And this is a shooting star, letting us know that price is trying to reverse. So remember, our last candle closed here. Okay. This candle opened here. The bulls came in, right? And it looks like it tried to come into this area right here also. Right? So the bulls came in, pushed price all the way up to fill in these gaps. Okay? And then the bears came in and was like, now it's time to sell. Okay? The bulls tried to come back. It reacted again to that gap, and then price went down its way. All right. Do I live trade on TikTok? Yeah, I live trade. We're here every day at 8 p.m. Some days at 8 a.m., but I'm not really a morning person. I literally like trade from my bed. So, but every day at 8 p.m. we are here. All right, so that is a shooting star. Now let's see if we can find a hammer and a gap. But at 8 p.m. when we're here, I mark up the charts and I literally show y'all what to look for. Yeah, we're here. Come back. I don't trade on Mondays, but Tuesdays for sure. So even though we'll be here 8 p.m. marking up our chart, and then Tuesdays we'll be here. This works on Forex and futures. Okay. All right, so let's find a hammer. Hammer at a gap. I trade all of them. I trade all of them. Asia, Asia, London, and New York. Okay, so sometimes if I'm like up for London, I'll come and I'll go live. We went last week live on London. You just have to, when I get off of here, when we end this live, click the notification bell and it'll notify you when I'm live. Okay. But for sure, I'm here every day at 8 p.m. All right. I thought I saw a hammer. I did. I saw one right here. Okay. So we had two gaps, right? And that one doesn't really work because it didn't touch here. Remember, this is inducement. You see how price came close to this 50% and it went in the direction of the buy. This is why we wait on that 50%. So neither one of these is an accurate hammer. This isn't a hammer, but it is a dragonfly. We got a gap, right? Price came down into our gap, and then price pushed up, and then price continued higher. The market is closed. No, we're not trading live right now. We are doing our beginner Forex course, and we are going over the candlestick trading Bible. It's Friday evening, babes. But I love the market so much, I literally want to look at it all day, every day. You've been trading, you just need to know what times it open. Baby, how you trading if you don't know what time it open? That sounds like you don't need to be trading. That's beginner basics, boo. We did that on day one. It's on our YouTube channel. It's on my YouTube channel. The link is in the bio. You just open your laptop. See, you want to trade pairs according to their session. And you don't know the session if you don't know the times of the zone of the trading sessions. Okay, so let's go to a different pair. Right? So like EU is best during London and New York. You already have a fund and you just don't know the open time. It just sounds like you're trading backwards to me. All right. Soon as I open up Euro CHF, we see a pin bar beautifully. Okay. At a gap. All right. So we got a fair value gap right here. Price came back to the gap and it pushed on up. It gave us our hammer. Okay. So remember, on our previous candle, price closed here. Then on the next candle, price opened here. Okay, price pushed up. Price came down. Price closed here. Then on our hammer, price opened here. Price pushed down into our gap. And then price closed here. And then price decided that it wanted to come back and test our gap again. It tested this area a couple of times, right? And then it pushed away from our gap. All right, so that is a hammer. All right, so when this candlestick forms near our zones, it should be taken as a high probability setup. Yes, definitely not support and resistance, but near our fair value gap zones, okay? All right, in the next chapters, I will talk about it in details and I will show you step by step how to make money trading this price action pattern. The Harami pattern, the inside bar. The Harami pattern, which is pregnant in Japanese, is considered as a reversal and continuation pattern. It's considered as a reversal and continuation pattern. Okay, I had to read that. I was like, how is it going to reverse and continue at the same time? But okay. Was the garage door open? The garage door was open? I didn't hear it go up. Hey, babe. And it consists of two candlesticks. The first candle is the large candle. It is called the mother candle, followed by a smaller candle, which is called the baby. Thank you. For the Harami pattern to be valid, the second candle should close outside the previous one. The candlestick is considered as a bearish reversal signal when it occurs at the top of an uptrend, and it is a bullish signal when it occurs at the bottom of a downtrend. Let's see an example, all right? So this looks similar to our engulfing candle, right? But the difference with this is the big candle is in front instead of the back, okay? So with the pregnant candle, right, this is the mama and this is the baby, right? And then with the engulfing, you'll have the baby in front and then the mama in the back, okay? All right, and this is Harami pattern bearish inside bar. The mother and then the smaller body, the baby, okay? So bearish, the candle, the baby is at the top, and bullish, the baby candle is at the bottom, okay? As you see, the smaller body is totally covered by the previous mother candle. Don't bother yourself with the colors. The most important is that the smaller body closes inside of the first bigger candle. The Harami candle tells us that the market is in indecision period. In other words, the market is consolidating. So buyers and sellers don't know what to do, and there is no one in control of the market. When this candlestick pattern happens during an uptrend or a downtrend, it is interpreted as a continuation pattern, which gives a good opportunity to join the trend. I definitely would not agree with that. And if it occurred at the top of an uptrend or at the bottom of a downtrend, it is considered as a trend reversal signal. Okay. So we're gonna look and see. We're gonna find our zones, and then we're gonna look for this, and let's see if I also can learn something new with y'all. Okay. So this is our bullish Harami. So let's find a bullish fair value gap and see if we can find a bullish Harami with that gap. Okay. Is this a bearish one right here? A bearish Harami? Okay. So we got a bearish Harami right here. So this is our big candle, right? The mama, and then this is our baby because it's inside of this one. So in order for it to be inside of it, it cannot run the wicks, okay? It cannot run the wicks. It has to be inside. Now, it says that it signals continuation, right? Which it did drop, but then price came back to our gap. Okay. So there's no way that I would enter in right here because then you would be in about 16 pips of drawdown, which isn't bad. But why be in 16 pips of drawdown when you can get in a more accurate position? Okay. And then let's see if we can find a bullish one. All right, so this isn't considered a Harami because that wick is up there, okay? Let's see. All right, so here we got a big candle, little candle, but that wick. Now, Haramis is one candlestick pattern that I don't look for at all. So I can't just spot it at all. Like, okay, here's one. All right. So as long as it's inside, it doesn't have to be a tiny doji, right? It just has to be inside of the bigger candle. And see, that wick didn't run that wick, and then it didn't run this wick. It's inside. Okay. So here, this one did signal a reversal. Okay. So I may need to start looking for those. I'm definitely going to write that down. And we'll start seeing how we can implement that. All right, so that was a bullish and bearish Harami. All right, so the tweezer tops and bottoms. The tweezer top formation is considered as a bearish reversal pattern seen at the top of an uptrend. The tweezers bottoms formation is interpreted as a bullish reversal pattern seen at the bottom of a downtrend. All right, see below. Tweezer bottom. So I hear some people call this a double body candle, right? Because they're both full body, but there is a tweezer bottom. So again, the tweezers top formation is considered as a bearish reversal pattern seen at the top of an uptrend, and the tweezers bottom formation is interpreted as a bullish reversal pattern seen at the bottom of a downtrend. Okay, so this says tweezer bottom. So this is a bearish candle and a bullish candle, okay, and they're similar to each other. So a bearish candle and a bullish candle at the bottom of the trend would signal an uptrend. All right, and then a bullish candle and a bearish candle, which is a tweezer top, would happen at the top of the trend, and it will signal a downtrend. Okay, the tweezer top formation consists of two candlesticks. The first one is a bullish candlestick followed by a bearish candlestick, and the tweezers bottom formation is consists of two candlesticks as well. The first candle is bearish followed by a bullish candlestick. So we can say that the tweezers bottoms is bullish version of the tweezer top. The tweezer top occurs during an uptrend when buyers push the price higher. This gave us the impression that the market is still going up, but sellers surprised buyers by pushing the market lower and closed down the open of the bullish candle. The price action pattern indicates a bullish trend reversal, and we can trade it if we can combine this signal with other technical tools. The tweezer bottom happens during a downtrend when seller pushes the market lower. We feel that everything is going all right, but the next session price closes above roughly or at the same price of the first bearish candle, which indicate that buyers are coming to reverse the market direction. If this price action happens near a fair value gap zone or a candle range zone, then it'll be accurate, right? So this is our tweezer bottom. Price was in a downtrend. Remember, and with the tweezer bottom, you have to have a bearish candle and then a bullish candle, and then that signifies our reversal. Okay, so let's see if we can find a tweezer bottom. Okay, so that was a bearish candle and a bullish candle at the bottom of our zones. All right, here's an morning star at the bottom of our zones. We got our bearish, our doji, and our bullish. Tweezer bottom. I want to make sure I'm saying it right. Tweezer bottom. Okay, so I want to say these two are tweezer bottoms, but I think, yeah, price has to open and close in the same area for it to be a tweezer top or a bottom. So let's keep looking. Okay, here we go. See how price open and close in the same area or near just about the same area? That's just like a little tiny pip difference, right? So that's our tweezer bottom. And right here, price did, oh, gosh darn it, price did reverse. Let's find it again. Here we go. All right. So we had this little bullish trend, and then price went bearish, and then price gave us our tweezer bottom, and then price went bullish, and it gave it to us near a fair value gap. See that? So that was nice. Okay. I'm going to start looking for those a little bit more myself. Now, I do have a friend, she uses these. She calls them double body candles. So that's our tweezer bottom. Let's see if we can find a tweezer top near a zone. This is an extremely engulfing candle. That's crazy. And now I happen at a zone. All right, this is another tweezer bottom. Okay, you see how they're exactly even like that. All right, and then we have a little tiny fair value gap. I'm trying to find a top. Because I'm looking for the pattern. I may have to go down to the lower time frame, but I don't see it. I haven't seen it yet. As far as the top, we've seen a couple bottoms. Tweezer top. So this is a tweezer bottom, and this is our tweezer top. Hey, Jagoya. All right, let's go to another pair real quick. Let's see what we got. Because we are going over candlestick patterns. What time frame? Excuse me. What time are we looking for, and what are we looking for, and what time frame? We are looking for a tweezer top, any time frame, any pair. Just let me know if you find one, and I'll look for it and pull it up. But we're looking for a tweezer top. So a tweezer top is a double body candle, right? The open and the close is exactly the same. All right, so here we go. We found one. Right here. All right, so we got a tweezer top here, and it did signal our reversal. Okay. I don't see, I see a gap here, but that's so far away. Price reacted to it a couple times already. but this is our tweezer top, and it did do, as they said, it happens at the top of a trend, and it shows you a reversal. How do I set it up like that? TikTok Studio. So you just go to your scenes, and then I add my image, camera, and display. I'm actually frozen right now, so this video is gonna go on YouTube with just the top of my head like that. But all right, so that is going to conclude day 3. Okay, we've been on here for about 2 hours right now. All right, you need a PC. I'm not really sure. You'll have to see if you can download TikTok Studio. All right, thank you guys for getting alive to 10K likes. All right, we will continue this until we get through the Candlestick Bible. So day 1, we talked about currency pairs, what are cross pairs, what's leverage, and stuff like that. Day 2, we went over our day trading mini dictionary. All right, and then day 3, we've started our Candlestick Bible, and we've started to identify some candlestick patterns on the chart. Okay, so we finished on page 44. There's 168 pages left. So it's probably going to take us about 3 more days to get through this. All right, and you can find this file. I'm going to drop it in the Discord. So just click the link in the bio, or you can just go to ChatGPT and ask it for the Candlestick Trading Bible PDF, and it'll show you where to get it from. Okay. All right, guys. So thank you so much for joining me. If you are new here, again, my name is Sierra, the Wealth Empress. I am your day trading, credit, and funding strategist. Okay. If you don't have the funds to trade in the market like you want to, I do credit repair so that we can get you in position to get you some funding and then show you how to grow your capital. Okay. And then if you think that you have the credit score to get you some funding, click the link in the bio and we'll get you some funding. And I will also, show you how to flip that capital in the market. All right. What times am I usually on? I am here every day at 8 p.m. Eastern Standard Time, like every day, 7 days a week, unless I don't feel like it. No, no, every day, 8 p.m. Eastern Standard Time. But click at the end of this, when this goes off, click the notification bell, because sometimes I come on during London, and then sometimes I come on during New York and live trade. Okay. The link is in the bio for the free student Discord. All right. If you are in need of one-on-one mentorship, that is also in the bio, but right now we are doing our free course right here on TikTok. Okay, so I hope you guys are taking notes. I am taking these videos and uploading them to YouTube. All right, so go back and rewatch them. All right, and I think that's it for the night. It's 10:19, and you guys have a good weekend. I'll see you tomorrow evening at 8, and we will proceed with day 4. Y'all have a good evening.